Hello, everyone. How's it going?
Good.
Good.
How are you?
Episode 38, Pickers Market Podcast. Lisa said, let's go right at the beginning. I kind of liked it. I wish we would have kind of had that as the intro. It was better than mine. Episode 38 sees the return of Mr. Tan over here, just making me look white and pasty by comparison.
Yeah.
That's fine.
I had to adjust the camera that we do not.
Well, he was just glowing
that way,
behind. And all that. It's like, Keith looks angelic.
Yeah.
You actually look like you've been on vacation. That's good because when I return from vacation, I am as pale as before.
Okay.
Or lobster red.
Got it.
I only know two
Those
settings.
are the two. Those are the two shades.
Yeah.
One
Got
or
it.
the other, huh?
One or the other.
No, a lot of time laying on the beach, so it was good.
Where'd you go? For
Turks
the
and
listeners?
Caicos. Turks and Caicos for the first time I've ever been, so it's fantastic. It's down the Caribbean or Caribbean, however you want to pronounce it. So it was great. A week long, took the family. We just relaxed and all inclusive, which I don't normally like, but it was good. Beach, pools for the kids, and
Weather was solid.
Weather was 78, 80, a little cooler than
Lovely. That's perfection for me.
And then night would get down to 73, so not bad. Right?
Wait, so 78 to 73 was the range, or did it go?
Yeah, no, I'm taking the highs were 78 to 80.
Okay.
And then the lows were about 70 to 73.
So it just didn't move.
Didn't
really.
move.
Oh, that's perfect. Right?
Yeah.
Good.
It's
That's
good.
It's not
Nice
too
and
hot.
relaxed, tan. So we're good to go. I mean, now, this morning I got up at our house, so I came back on Saturday, and today is Tuesday, and it's minus 10 at the house. So that was a 90-degree
Welcome back,
difference.
sir. Welcome back.
That's tough.
a little slap in the face this morning.
Yeah.
Lisa, you and I have something going on. Do you want to kind of explain where we're headed here tomorrow?
Tomorrow, yeah. We are heading to Summit, to Austin, Texas. So hopefully also a little bit more nicer weather.
Is it 80
in Minnesota? No, unfortunately
50s
not.
and 60s.
Yeah.
I already looked it up.
Yeah, me too. So not necessarily short sleeve weather, but at least it's a little bit more.
Oh, it is for me.
It's not as hostile.
Jeremy will still have shorts on.
if you're watching this, Jeremy's got a short sleeve shirt on. I'm in a heavy sweater and another jacket on top.
And I put a scarf on top because it's like.
Well, you guys cold?
Yes, Jeremy. It's winter.
So,
you're through Minnesota.
Yeah.
So 50 for Jeremy's gonna be good.
Oh yeah. I'll be just fine. Now again, it won't be like pleasure cruise experience, but I can't handle the 90s and 100s like you like, where I just feel that's just tough for me. I'm much better at this. I would take 60 over 95. Would you?
Yes.
No.
Yes.
Yeah, I didn't think you would. Yeah, so we're going down to Texas for Summit. It's our annual kind of kickoff event. Lisa, well, we're going down to Texas, so I'm gonna say this is your first rodeo.
It is
into it, so she's gonna do great. Keith, you don't get to come.
No,
not this time around. Somebody's got to hold down the fort, right?
Yeah. Or hold up the
or
fork.
the fork.
The fork.
Like Lisa likes to
Please,
say.
Jeremy. We changed that.
Yes, the Austrian version is hold up the fork. And actually, I like that one more anyway. All right, let's go to the hot button topic. We're gonna do. Oh, we should have mentioned that we do have a missing chair.
Oh yeah.
I guess we weren't missing him.
No, we're just rolling right without him.
We'll hear about that tomorrow.
Totally open for that one. Tyler is not here. He is we did this a day early because we're going to be on a plane tomorrow, so we did a little early, so he couldn't make this one, unfortunately, but he'll be firing back next week.
He's probably at home packing for Texas as well,
getting his outfits ready.
Yeah. He's got his little kids probably toy guns ready to go.
He's ready to go,
firing off the pot guns, and he's got the spurs on and all that stuff.
And we have some themed evenings, so he better be.
Yeah,
he better be ready.
We should tell him Spurs might not get past TSA, so he might want to pack those. All right, let's talk. So I told him what we were going to talk about yesterday, and I told him he's probably going to be pretty jealous because he would have nerded out on this altogether.
That's his topic.
This is his.
Yeah,
this is right in his
world.
wheelhouse.
Yeah.
Is that the hot button is kind of dollar and interest rates. And the reason why I want to talk about it is because we've had a pretty significant change here recently, right? Is that the end of September to now, the dollar has appreciated rapidly compared to other currencies, and interest rates have gone up. I mean, during that time, probably 100 basis points. We're at about 4.8% at this point right now. So, I mean, both of the levels that we're at, the dollar, we haven't seen this level since 2022. The treasury rate, when I'm talking about that, I'll talk about the 10-year treasury rate at 4.8%. We haven't seen that since 2023. So, been a little bit on both of these. Just want to get your opinions on what is causing it. What is causing this acceleration from this level? Were we just too low before, and now this is more normal? Are we getting elevated? Where do you all see it? What do you think are the primary reasons for causing it? Gangl, I'll start with you.
Yeah, I'll start with the dollar, just because we don't talk about that as much, and we get a lot of questions from our advisors and clients, always panicking that
It's usually the dollar's going away, right?
Right. That's my
now that
point.
it's
That's why we'll
stronger.
start with this. We always get it's like, oh, the dollar's going away. It's whether it's crypto or some other replacement,
bricks, all
the
that fun
bricks,
stuff,
all the good stuff, and we're we've been on record several times saying U.S. dollar still king. It remains king. And what's fascinating is, like you said, if you look at the DXY, which is an index for the overall market basket of the U.S. versus some other currencies, and we're at around 110. If you just go back, it's been around since the 90s. 110, like I said, it's back to 2022 levels.
Yep.
And then more recently, it was around 100, 105. So it's had a big move to go to 110. So it's actually appreciating.
Yep.
Which I think part of the reason it's doing it is because of the strong economy. I think part of it is due to our interest rates kind of remaining higher. So
especially since strong economy is always relative, right? Because currencies are relative to something else, right? And so what is our index compared to others? And when we have a stronger economy, generally we have a stronger dollar as a result of it. So I think
which is funny though, because if you don't look at it and you hear the news reports, I would have expected you to look at DXY, the index, and we'd be at like 70, right? Because I looked, and if it's a long term, we talked about this in the past. It's very glacier to make a move. So even moving from 100 to 110, that's a pretty big move,
substantial
in a shorter period of time, right? So it's the low we had in the last, I think it's about 15, 20 years, been about 75. That was back in 2010, 2008 timeframe when the U.S. crisis. But if you look at that now, that chart's appreciate from 75 to this 110 that we're currently at. So we're actually getting stronger when everybody's talking about bricks and crypto and other things like that. So
all the other replacements for the dollar.
That's a big message for me.
Lisa, what do you think?
I also kind of wanted to touch on the economic growth, like the still resilient economy, and you mentioned that as like, okay, compared to what?
Yeah.
And I think like when you look at international developed countries, then the US is outperforming all of them.
Yeah.
By far.
Yeah.
And like the dispersion gets even more and more, and was even more severe seen in the last year or so. And I mean, it is expected to grow like 2024 and 2025 higher than average. Well, the whole kind of other international developed countries are growing much slower, or in a recession, or in a downturn. And then also leads it at the end of the day to different monetary policy. Kind of where we are with rate cuts, whereas Europe with rate cuts, Japan and all of that, which makes it even more severe, I would say. And I think that bodes well that this strength, the US dollar strength, can even continue into 2025.
Yeah.
Because I don't see any big changes there necessarily.
Gotcha. Is the same thing that's driving the dollar up is what's driving interest rates up as well?
I think partially. I mean, if you've seen the interest rates bottomed at around 375-ish or 360, somewhere there. Like I said, we're almost up 100 basis points. So exact same thing. We're getting a stronger economy. I think part of also interest rates recently is the Fed's expectations were, we came into the 2024, we have 6 to 8 cuts. We ended up with 4 at 100 basis points. And the expectations for next year, if you just went back a couple months, was 6 to 7 cuts. And now we're at 2.
Yeah.
Right. And so I think that's part of the reason that the 10 years kind of gone up from, that 375 to that 480 range that we're in right now. So less economy stronger, inflation could be stickier. We have the new administration coming in, so we don't know exactly what the policies are, but I think that all contributes to strength of, the US dollar, kind of potentially pro-growth policies, which is good for the economy, but might have inflation remain sticky, which then now the interest rates, I think, are kind of stuck in this higher level of ranges. I think we talked about that on, our quarterly, economic outlook and some other things as well. What are your thoughts on that?
Yeah, I would tend to say, the same. I think the uncertainty of what you just said before is what's kind of driving a little bit of both of them up, right? To a certain extent, is that there's uncertainty with regard to what the policies are going to look like, what tariffs are going to do, what inflation's going to look like. And I think that greater uncertainty right now is just driving things upward a little bit more than downward. Now, again, over time, usually that ends up going the other way. But if the Fed is actually in pause mode, like it sounds like, the commentary that's come out here recently from the Fed governors, and then secondarily, just what the probabilities have suggested, is that the market is really now anticipating much more of a pause mode than a continued cutting mode, right? So even those two probably get delayed until maybe late spring, early summer, right? Those two cuts that they're talking about are not going to be in January and February, right? It's going to be probably a little further down the road. At least that's what the market anticipates right now. I think that's why you've seen that drift upward. Now, again, who knows how sustainable these things are. And once we get a little bit more information about when he's actually in office and what the agenda looks like and what they're actually going to try to pass quickly, I think you could see an aggressive pivot. That's been the big thing about interest rates. I know I'm kind of going everywhere here right now, but big thing about interest rates is over the last few years, I mean, they've just traded much more and with much more volatility than historically they had before. And I think that's the new regime. That we should expect, used to be that, going from 425 to 480 was a pretty dramatic event.
Yeah, we'd have to go wake up our bond department.
Exactly. Knock on the door. Yeah. Hey, there's something for you guys to do today. It doesn't exist that way anymore. They're, going from 380 to 480 is just, it's just part of the cycle at this point now. And it's not that much different. And I don't know if there's as much to take away from those things and saying that, a change in sentiment seems to affect interest rates much more now than it used to in the past. And maybe it's just me with rose-colored glasses, but it does seem very different. From your side, Lisa, I'd be interested to your thoughts on just who this, we always think about these things in, again, we talked about last week was my level of prediction and my hate for it.
Come on now. Where's Tyler when you need him?
But Tyler got him in the right
corner.
Tyler backed
me in a corner. I started scraping like a cat at him. But from that side, we do try to figure out who is helped and who is hurt. So maybe if you can give us a little bit on who your thoughts on who is helped and who is hurt by these things, that would be.
Yeah, good. I think from talking about a strong US dollar, like people that are hurt is, for example, exporters, importers, it helps them because it's getting cheaper, but it hurts because US produced goods get more expensive overseas or wherever they are shipped. Then also it hurt companies that have, for example, the headquarters in the US, but exporting or getting a lot of their revenues abroad. And when they kind of change the currency back to the US dollar, that kind of pinches them. It also hurt. I mean, I can say, I can tell you a sad story from myself.
Okay.
With the last spike in 2022, that was exactly the time when we moved to the US.
Okay.
And we basically had to change all our life savings to US dollar.
Oh yeah.
And that
conversion.
Let me put it that way. That was a very hurtful time for us.
Oh no.
But it's good the other way around, right?
Right.
When US tourists kind of
very good point.
Because vacation overseas, and I mean that's probably a smaller part, but I think it's also good to mention it.
Are you going back to this year to Austria or
later?
I mean, if it's a stronger dollar, man, you'll be spending like mad just getting that economy going over there in Austria.
Spreading that economy around. And like,
Austria is suffering, but I was like, help is coming.
The mothership is home.
Quantitative easing by Lisa alone, right? Just doing it for you.
Everybody has a sneak preview for the second half when Lisa's over there.
I'm pushing the economy over there. I mean, that's a smaller part with tourism.
Yeah, but no, the initial one that you hit, I think, is absolutely right on the head, is the multinational companies. And I think this is going to relay itself pretty early into earnings season. Not necessarily the numbers, because the numbers are from 12/31, right? So, but in the outlooks going forward, because we've had this significant trend and that it hurts them when they're bringing those dollars back. And then secondarily, interest rates, if they're capital intensive, they're going out and lending or getting money, right?
From both sides.
I think you're going to see some of these companies, the industrial side and those kinds of companies, especially the multinational ones, which are prevalent in the S&P.
Mhm.
I think they're going to start talking down numbers a little bit as a result of these kinds of headwinds. Now, people tend to, how much they put into that is a little different story, right? You kind of look through it because it's tough to predict. So you just say, hey, what are general business trends, X currency and X, these kinds of things. But these are real impacts to the actual earnings number. And so from that side, there could be some, we've talked about 15% being too optimistic and that something could bring that down. I think this could be one of them. I think this could definitely be one of them. What do you think, Keith?
Yeah, I agree. I'm actually looking forward to earnings season just because I think it's going to give us a lot of insight into the next year, right? We're wrapping up Q4, we're going forward, and all the things you mentioned, we'll hear on the calls. And then it's funny that as analysts, people X currency anyway, so you're kind of looking at fundamentals. But when you roll up the numbers, when you're doing valuation on the overall market and you have a 22 PE, that's going to impact it, right? If numbers are coming down, that 22 is actually going a little higher, which we're already in that kind of yellow to red kind of territory we talk about on multiples. So it's definitely important. So we'll keep an eye on that. And it's things, again, we'll start here in the next couple of weeks and we'll find out more.
Yeah. The X currency numbers, you can report them all day long. You can come out and say X currency we would have done this, which gives you a sense of what the
real impact.
Yeah, exactly. The earnings number at the end of the day is not X currency. So the number that they have to put through that goes through the S&P 500 sure is going to be affected by that. And if it's a headwind, it's not going to help growth. Let's put it that way. I think we're more hit, the things that are happening right now with regard to interest rates being up and the currency being up, those are probably more headwinds to the S&P 500 than tailwinds. Would that be fair to say?
Yeah.
That would be fair.
Yep, exactly. I think longer term, having a strong, always the debate of strong. Everybody says we want a strong dollar, and then in the back of their minds, like, weak dollar isn't so bad, right?
Strong dollar sounds great from America. We're a strong dollar, but from the business, Colgate probably doesn't want that terribly strong of a dollar. Procter & Gamble probably don't want that terribly strong of a dollar because they got to bring that stuff back. And that's tougher for them.
Yeah, so it's always a balancing act, right? You don't want a weak dollar because I think strong dollar in the end is good for the consumer who spends, right? Which again is 3/4 of our 2/3 of our GDP is driven by consumer spending. So longer term, you do want a strong dollar because
I always say relatively stable dollar is kind of what I like. Just not moving around a whole heck of a lot. Not being torn apart because our economy is terrible, but not also going so much that it hurts our business. Right? If you can kind of sit in that middle zone, that's probably the ideal spot.
That's our wish for going forward
for 2025.
That's our wish for 2025.
All right, let's pivot. I want to talk about. I want to nerd out a little bit. I want to talk about healthcare stocks because the answer is they've been bad. Yeah. So my quick stat on that is just over the past year. This was as of I think yesterday. S&P 500 is up about 22%. Healthcare is down about 1%. So that's a pretty big spread. And healthcare is not a small component of the S&P 500. So everything else has been just kicking its butt, for lack of a better term. Let's break this down a little bit. I'll kind of start with just kind of the general perception about that, but I want to kind of, the three big industries that I see in healthcare, and feel free to tell me differently: drugs and pharma, devices, medical devices, the kinds of things for surgeries and all that fun stuff, and then services like insurance and hospitals, right? So those are the kind of three areas of healthcare. Am I missing anything?
No, those are the big three, and you kind of broke them out. I think that's kind of how most analysts and portfolio managers kind of divide up the universe. Yeah.
So let's talk about it in those three categories and just kind of say what have been the issues and are they correctable? So let's start with drugs and pharma. Lisa, do you want to kind of give anything on that?
I mean, I think I want to start overall.
Sure,
like
for sure.
The kind of overall healthcare industry is more set to be recession proof or more proof than other industries. But the recession never materialized.
Very good point.
There's still a resilient economy. I think we mentioned it in every podcast so far. And they kind of missed out a little bit because there was a lot of AI, tech, and all that frenzy. And they just kind of, because it didn't materialize as such, and because there was other thing, I think they got outshined a little bit to begin with. I think the whole sector got left behind, I think in part due to that.
Okay.
And when we look at the different sectors, like you say, I think there's also and it's 5 years ago, but there's, I think, still maybe a little bit left over from the last pandemic, where people maybe kind of delayed surgeries, doctor visits, whatever, and they kind of did that after that, which helped device companies, which help hospitals, but pinched insurers, for example.
For sure.
So there you can see the dispersion of what helps one subsector hurts the other one within the same industry. So I think that's maybe part of it.
Gotcha.
Yeah, I mean, I agree, Lisa, when using the market's a little more choppy, healthcare is kind of one of the areas people run to.
Yep.
And to your point earlier, healthcare is of the S&P, it's about 11%, which is like the third largest sector. So it's significant, right? Because tech's the biggest one.
And it used to be bigger before.
It used to be bigger, right? Because it's your stats are what I was looking at too. They were down 20% in a year, and if you actually go back to 2023 as well, it underperformed by 20%. It's kind of what Lisa was touching on, the fact that AI was driving the market, other technology names. So healthcare got left behind. And if you go to 2022, when the market was really bad, they actually did better. So that's part of a little bit. They do a little bit better when things are choppy or kind of sideways. When the market's been ripping, I think they kind of tend to lag. And then there's different reasons. You touched on a little bit because of the COVID hangover, right? So people kind of delayed surgeries, and those things have been doing better. And then when you actually go in there, that's negative for, the actual people that are paying for it. And so that's negative for the insurers and other things like that. So I think that's where we're at with what's going on now. Now, if you want to talk about drugs and pharma, there's certainly been winners and losers. Let's talk about that one to start with.
Yeah, for sure.
Obviously, the winner the last 2 years has been the GLP drugs, which is
by far
Eli Lilly. It's been a monster stock for 2 years. And multiples typically, when we're looking at PE multiples on these large pharmas, are anywhere from that mid-teens kind of range, because they're consistent growers. They pay a dividend. It's all good. Eli Lilly got the GLP one right. I mean, a massive drug, huge sales, and their multiple is now at 35 times. Stock was a massive outperformer. And then the last 2 years, things that did well, like I touched on COVID, the vaccines, for example, right? Pfizer and all those did really well. But the last 2 years, people aren't taking them. Their sales fall off a cliff. You go over year performance. Those have been disasters. So I think in the drug space, there's been the haves, which has been very few, with Eli Lilly's of the world, and Novo has been the other one. And then the other ones are the have-nots. Basically, anything to do with, virus vaccines, the stuff that we were using a couple of years ago, that's the use case is a lot less.
Yeah. I mean, you just, the poster children for that. If you want to look at Eli Lilly and Novo for the GLP-1s, look at their charts versus Pfizer and Moderna, right? Look at their charts.
Just absolutely.
Just collapsed, right? I mean, Pfizer's just had, Pfizer's always been just kind of a low growth and whatever. And then it had the huge pop because of the vaccine stuff. But it's subsequently given that up, and then even some more because, again, like you said, just the recurring is getting lower and lower every year. That's it. Yeah. I mean, pharma's been so interesting because if you just look at those names, like if you think about just what the general perception of the, I would say the US consumers, that, those go up every year because,
you need them.
You need them, and healthcare spending goes up every year, right? It has clearly not been the case. I think you two are absolutely right, is that there's a component of this in saying, and this is, these will work better when markets are choppier or kind of flat. In go-go markets, there's just other things that people are going to pay more attention to. I think that's accurate. And I think GLP-1s were benefited from that too, obviously.
Innovation, right?
Exactly. And innovation and those kinds of things. What about the other, what would you say, how much influence do you think? Because I think this industry, probably more than others, is influenced by government forces. For sure. Right. Policy, so how much do you think that has had an influence on the behavior of the actual stocks themselves? Or do you think it's been outside government forces?
I think that's part of it. And you could see, like last year, we was talking about the underperformance of healthcare versus the overall markets. It's about 20%.
Yep.
If you go through the first part of the year into summer, it was lagging barely. It was fairly close.
Yeah, we're keeping up.
Yep.
And I think then all of a sudden we have election coming up. Regardless of who, election is always kind of choppy for healthcare names, right? Because they're always in the target here. Because the other stat is healthcare used to be about 5% of GDP about 50 years ago, and now it makes up 17, 18% of the overall. So it's a big, big piece of the spend for the U.S. consumer. So politicians always want to promise change, cut this and that, right? So then healthcare stocks obviously are one of the areas that get hit. I think that's where we're at right now. We're in uncertainty of who's coming in. We obviously know the president's going to be. We don't know, we hear Robert Kennedy is going to be the HHS. And if he is, he's generally not a huge fan of vaccines. And so I think that's part of the reason we had sell off to large pharma, right? Because they make a lot of money on vaccines, which could be a problem. So there's a lot of uncertainty, but usually what ends up happening after the new administration comes in, whoever it is, things are less bad than what investors anticipate, right? So I think we have that potential catalyst coming up for that. We have valuation that's really cheap relative to the S&P. I think it's down. The bucket I was looking at is about a 20% discount to the S&P 500, which normally healthcare is about a 5%. So
it's about as low as it's gotten.
It's a pretty
history,
big delta right now. So a lot of things are pricing in for some negative news. I think it is policy related, potential policy related.
Yeah. Lisa, what do you think?
I agree with that, and we can see it like right around the election, and after that with his potential health secretary, with Mr. Trump's potential health secretary pick, like you mentioned, that would impact negatively some areas of healthcare. So and all the uncertainties about policy changes. I think with the valuation that we are right now, and with potential more clarity going forward as soon as the new administration takes office, I think it could be a little bit better playground for healthcare going forward, as soon as we have some certainty there how it will look like, and we potentially have more clarity pretty early, because it's said that Trump's administration come in strong with kind of laying out pretty early what they kind of wanted to do, what they wanted to achieve. So I think it should be a little bit more quiet in this area again. Probably, I don't know, but will probably not happen tomorrow. But it should be maybe the turnaround in 2025.
Yeah. I going to your point, Gangl, and I completely agree with you. If you're a politician, there's no negative points for attacking healthcare companies, right? They're greedy. They cost too much money. Look how much you're paying for insurance, and look at your quality of care, right? That's it's an easy target for them. Solving that problem once they're in office is much more difficult. And I think that's where we'll end up finding out here. And I think there will be value in this, but I said that last fall, and I would have been very, 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 very wrong, right? Is that, it just, the sentiment can go much. This is always back to this, is that the sentiment can always go further and more negative than, and much more positive too. Both ways can always work. And I would have been entering into healthcare in the fall of last year, and I would have, I would have got pretty punched in the face for it. So having that component and just understanding that could, I think there's greener pastures ahead. But trying to time that perfectly is a real difficulty.
But I think, go ahead. But I think there's like you said, greener pastures ahead. Like we still have all of that growth trends, like the big trends, like aging population and all of that new innovation that we need to kind of keep those people healthy and kind of happy. So that is a huge part that is still at play, or not yet fully. And then we have like the AI adoption, which was, and we talked about that I think 2 podcasts back, where now everything is focused on the infrastructure and not solely on the brain power. But at some point, nobody knows when, it will broaden out, and tests and kind of where they tested what AI can do for cancer screenings and especially in healthcare, where the tests show it's really good and it can be adopted very well, and it can do a lot of good there, that we probably see a lot more shift to adoption in the healthcare industry. I mean, we do not know what companies this will benefit most and when it exactly will happen, but I think that's good news ahead. And once that will take place, I think that could be a great turnaround story.
Is there any of those buckets, Jeremy or Lisa, that you like better than another? We talked drugs, pharma, and devices, services. Is there any, if you had a kind of rank order or anything that sticks out for you guys?
Within that space, personally, I think insurance has just been beaten up so much. I still think, again, everybody hates insurance. Everybody hates healthcare insurance, right?
You always hate it. You pay for something, and if you ever got to use it, I mean, even away from healthcare, right? Property, casualty, and auto.
Generally, people just hate insurance to begin with. But I think, there is a component of there that I just, do we have the stomach to really change the course to disinvolve them or to involve them on a lower level? I really have a hard time believing that's the case. And with how much they've been beaten up, that's, if you're picking off the bargain bin, that's probably the area I'm looking at most, because I still think they're going to grow 8, 10, 12% per year. They just kind of do, because a small amount of margin benefit is huge benefit for them for the bottom line, because they're, contrary to popular opinion, their margins actually aren't that
No.
big, right? So from the side of the actual healthcare margins, a small improvement has a huge impact on their earnings. So even a small improvement, which they tend to over time be able to figure out ways to do so, tend to be beneficial for them. So I still think they're going to grow at or above market levels, and their valuations are pretty cheap. So that's kind of where I'd lean.
Yeah. How about you?
I'm more on, I think there's I agree with Jeremy, but I think there's also can be a lot of beneficiaries in the devices area.
I hope you're right.
Yeah. Especially when it comes to the AI adoption. And again, that will not happen tomorrow. Maybe not even in 2025, maybe a little bit further out, but it will happen probably at some time. And I think there's a lot of innovation to happen, or I see the most innovation there, and the like in the whole healthcare industry, I see the most growth opportunities in the device area, I would say.
Yeah, that's 100% where I go. I agree. Exactly what you said. That's the reason I generally, of all these 3 buckets of services, because innovation, they generally go faster. There's a lot of different, also you can get a new device and it goes into some kind of, surgery or something like that. And it can be an absolute home run. So that's the area I like. And there's, there's winners and losers the last couple of years. We've had, names like Intuitive Surgical, that's a name. That's robotic surgery. It's been a big winner. Boston Side has been another winner that we've owned. And there's other names that are like Boston Side that have been underperformers, like Medtronic.
Medtronic
has
just been
I
stuck
think
in the
those are
mud.
some high quality names that I'm looking at.
Yeah, it's interesting. None of us picked drugs and pharma, right? Because if you think about the innovation curve, that's probably where you could probably innovate the most, right? You can, GLP-1s, right? You literally created a new market. So there's always going to be that there. But I think, in my opinion, the negative case, why I would put them last is just, I think that component of us beating up somebody, I think that's who we're going to end up punching in the face most often. And I think their pricing structure is, and just on a general basis, their pricing structure may be a little bit at risk.
Cool. Agree.
All right. Let's go on to, let's do a quick hitter. Let's do a quick spaghetti wall. Since Gangl is fresh off a good little vacation, let's do just kind of some fun stuff around vacations. So I got 5 questions here, and you all can give me your quick analysis on it. Lisa, I'll start with you. Let's start with cruises versus just going to the destination. Which would you choose?
So I never did a cruise.
Okay.
I
think we're over on the cruise. Oh, no, you said you've done one, right?
I mean, I heard that over the last years, it got a little bit more interesting for younger ones. Before that, it was just started for retirees and 70, 80-year-olds. I think that has changed a little bit. Not as much that I am intrigued to do one.
Okay.
I am more the road tripping.
So Lisa soft pedaled the absolute no.
Absolutely no. No, yeah. I went on one. That's probably going to be the last one I go on. I'd rather go somewhere and do my own adventure.
That's exactly right. I am not going to be on somebody else's timeline. No cruises for me.
All
right. Gangl, hotels or vacation rentals like Airbnb, VRBO?
100% with vacation rentals, VRBO, Airbnb. Those are, how I travel is with my family of 5. It's just so much convenient. It's like you can get up, have your own breakfast, your own lunch in your own time frame, and then you can go out for dinners if you want. So it just cost benefit for our family, the way we travel is fantastic. And then you have your own space, not like a hotel where you're pretty jammed into 1 or 2 rooms.
Yeah. Lisa?
I would say for me, it's a mix of both. It depends on what vacation I do and where I'm going, and what is at the end of the day also cheaper.
Got it.
Completely honest with you.
Should be.
And I mean, it was like a few years ago, it was VRBO, Airbnb was a lot cheaper, and now
how about you? Hostels,
going crazy.
Yeah, you've done hostels.
Yeah, I'm forced to do that. I just want to clarify that. But I'm not a poor student anymore. You can discuss that. I'm not a student anymore. So, but my husband is a hostel fan, unfortunately. So we will probably stick with that a little bit longer.
That is an adventure that I just have no need for at this point anymore.
Believe me, you have missed nothing.
Jeremy, I know where you lie.
Yeah, it's not hard. Give me a vacation rental any day of the week, twice on Sunday. I will pay more for a vacation rental than a hotel. It's I would rather have my own space. I'm just better at that. All inclusive or pay for your own stuff during that period of time?
Again, I never did all inclusive.
Never done one.
No.
Okay. I've done one of those.
I don't know the convenience of it. I always kind of Frankensteined it together myself. But I can see the convenience in it, especially when you're on a small island like you just did. That's probably more beneficial to do something like that where everything is planned out.
Yeah. So I just got back from all inclusive. Absolutely was a home run. But generally speaking, I'm doing do it your owner. just kind of plan my own stuff. This one worked just for my kids' ages, college and graduating from high school. It's just easier for them to get whatever they wanted to, for food wise and entertainment and all that stuff like that. So it's just easier this time. But no, we'll definitely be going back to plan your own.
Yeah, I'm a plan your own, unless it would have to be a really intriguing resort that I wanted to be at and that kind of stuff. We already said that I, for the most part, go vacation rentals, so that would leave me to all on my own.
Yep.
Here's a different one. Have either of you sat through a timeshare meeting before?
No,
absolutely not. I can't. I'm sure you didn't.
No, Jeremy did.
What? Oh, really?
Yeah.
Oh my God, you got scammed?
Yeah, Lisa, we need to hear more about
this. I will give it to you. When Beth and I got married, we were broke. Like, I didn't have any money. So it was like we wanted to do stuff, and I was like, okay, I'll give it a shot, because I didn't really know what it meant, what it entailed. I was like, I'll go to a meeting, we'll do a half hour, I'll just listen and nod.
You probably get a coffee and a donut with it, right?
And then we got in there, and I think Beth may have considered divorcing me for making her do that about 2 days in. She hated it so much. Like, I can kind of just stomach, you give me a sales pitch. I'm pretty good at just letting it go off my back. And, you can be as aggressive as you want. It's not really going to change my mind much. She just, her anger level just rose to like extreme degree, to where I'll talk about it now and she still gets mad. It's great. It's one of the things that's hilarious. So we won't be doing another one. Let's put it that way. But I did go through that.
Marriage, let's
stay
out of
yes,
this.
Exactly. I'd rather stay married than have a timeshare. Let's put it that way.
No, I never did one. But I heard from when we went to Mexico in November, like some of our friends said, and she's married to a Mexican, and they go back and forth multiple times a year, and she's like, do not sit and fall for that.
Yeah,
I know how it is. Do not do that. Right?
She's right.
And she was like so particular about it, and I had no idea that
it's the most aggressive pitch I've.
And she was very particular about telling us, do not do it. And I was like, okay.
There you go. All right, last one, which is funny to me. Do you do do you stick with some level of exercise routine, or do you just let gluttony and sloth completely take over when you go on vacation?
Go ahead, Lisa.
Okay. You both look at me. So, Jeremy and Keith, I am happy if I do exercise when I'm on my day-to-day at home.
Gotcha.
Right? So that's a success for me.
There you go.
And I try to get that down.
Yeah.
Not mentioning vacation.
Got it. It's just not part of.
It's just not part of the thought vacation.
Plan. Yeah. Okay.
Well, usually when we go on vacation, I like to be active and doing different things, but I certainly sit around and have probably a few cocktails and eat a little much. But even on this all-inclusive where I was on, is a big resort, beautiful. I did 16 to 20,000 steps a day, which is pretty good.
That's a pretty good number.
I mean, so
that's a big number.
I felt a little better about myself, for all the eating and drinking I was doing to offset it with that regimen.
I think that's what I can say as well. It's like the general movements that you do when you kind of are on a trip or whatever, and road tripping and just out and about. But it is more exercise than at home. Yeah. Just on the day-to-day.
Just different.
But just not like running or
weightlifting.
Doing,
or
right.
How about you?
Nothing like that.
Yeah, I would say my activity level is higher, but nowhere near offset by the level of gluttony and sloth that I do in
perfect.
The gluttony is probably much more of it. Is that, I will never, let's say I was on a restrictive food plan, which I don't do anyway, but let's say I was, that would be no chance that would survive the vacation. Just zero chance. Not happening.
Yeah, I mean, you have to treat yourself a little bit.
You do.
It's called vacation for a reason.
Right.
Yeah. So I'm going all out, especially if I'm at a nice location and cool stuff.
Yeah.
All right. With that said, let's hang it up. It was good talking to you too. We'll see you next week. Till then, thanks again.